In 2016, Chipotle reported that its profits had fallen 95% after a series of food safety issues that sickened hundreds of people and sent its stock price plunging.
E. coli outbreak that caused Chipotle restaurants to shut down.
Investors aren't the only ones steering clear of Chipotle.
I mean, it just keeps happening to Chipotle and nobody else. Even if it's not associated with their food this time, it's happened again. They've had to close the store because customers get sick.
It had lost customers' trust and Wall Street's adoration. Its future was uncertain. Would Chipotle ever be able to return to its high-growth days? But the Mexican-style food chain has come back from the brink with the help of a new CEO. Consumers are once again returning to the place that popularized burritos the size of a baby and helped the avocado become one of America's favorite fruits. Analysts say that its food safety woes are now firmly in the past, and its stock hit a new record in July 2019 and has kept climbing, peaking at $857.90 on September 9th. Now, there's just one question for the chain: how can it keep soaring and avoid another fall? Chipotle was never supposed to take off. Its founder, Steve Ells, only started the restaurant to make some quick cash to pay for his real passion project, launching his very own fine dining restaurant. Ells got the idea for Chipotle from his time in San Francisco, where he was working as a line cook for celebrity chef Jeremiah Tower. The Mission District in the California city is known for its taquerias. That's also where the Mission Burrito was invented. The burrito is oversized, stuffed with rice and other ingredients, and wrapped in foil. Sound familiar? With a loan from his dad, Ells moved to Colorado and opened the first Chipotle Mexican grill near the University of Denver campus in 1993.
I think one of the most amazing things about Chipotle is that the stores today don't look that different from the original location by the University of Denver. Really, the structure is very much the same. You know, customized assembly line process, very simple but aesthetically pleasing locations.
Chipotle's now quintessential minimalist layout wasn't a deliberate design decision. It came from a need to be cheap. In that very first Chipotle, the table bases were pipes, and the counter where you paid was made from barn metal. Ells kept the menu and operations simple because Chipotle was still his backup plan. Chipotle became profitable within a few months, and Ells was able to quickly repay his father's loan. A year and a half after opening his first restaurant, Ells opened a second, then a third in 1996.
In the early days, your options for Mexican food were so limited. So to see this, assembly line burrito company come up and out of nowhere, it was amazing how quickly word spread among the Denver market and how quickly this company really rose to prominence, at least in Denver during the mid-90s.
He kept going with additional funding from his dad and small business loans. Then he got a little help from a name you might recognize: McDonald's. Under the leadership of longtime CEO Mike Quinlan, the fast food giant started investing in Chipotle in February 1998. 3 years later, it was Chipotle's majority stakeholder. The investment helped McDonald's branch out of burgers and diversify its business. It also helped the fast food chain compete directly with a rival on the rise: Taco Bell. The money from McDonald's helped Chipotle expand across the United States. Most restaurant chains, including McDonald's, turned to franchising for quick and widespread growth, but Chipotle didn't want to. Handing over the operations of its restaurants would have also meant handing over some of its profits. Ultimately, pressure from McDonald's led Chipotle to franchise a few restaurants to several McDonald's franchisees at the end of 2002. In January 2006, the burrito maker went public. Chipotle's IPO gave McDonald's the opportunity to refocus on its core brand. At the time, McDonald's was in the middle of a turnaround after years of turbulence that started soon after it initially invested in Chipotle. After the IPO, McDonald's started selling off its 91% stake in Chipotle. By the end of 2006, it no longer owned a piece of Chipotle. Just 8 months after McDonald's sold its stake in Chipotle, the burrito chain killed the franchise model and took back control of all restaurants. The investment had paid off for McDonald's. Investors loved Chipotle, and the economy was booming. By 2007, its annual sales were more than $1 billion. Then the recession hit. Like most restaurants, Chipotle felt it. In 2009, it held the second largest market share, 11%, of the entire Latin American limited service restaurant industry, according to Euromonitor. Yet, the company had its slowest year ever of same-store sales growth that year, and its stock tumbled. In 2009, Chipotle decided that it needed a change. Besides building the company, Ells didn't have any business experience. The company promoted Monty Moran, its chief operating officer, to serve as co-CEO alongside Ells.
Well, obviously Steve was the visionary for Chipotle, and had a very much a culinary background. But I think Monty brought more of a traditional restaurant, background to the equation. And sometimes with the right mix of personalities, you can make a co-CEO model work.
Chipotle started thinking up other restaurant concepts with a similar setup. It created SHOPHOUSE, an Asian-inspired chain. Soon after followed Pizzeria Locale and Tasty Made. If those names sound unfamiliar, it's for a good reason. Chipotle has since abandoned them after they failed to catch on.
It came down to just competition and lack of simplicity and lack of brand messaging, I think, when it came to SHOPHOUSE.
Even when experimenting with offshoots, Chipotle didn't abandon its core business. Between 2009 and 2015, the company more than doubled its global total store count. New stores meant new customers. Unlike Taco Bell or McDonald's, Chipotle wasn't relying on value meals or limited-time offers to get them. Instead, Chipotle rolled out a series of ads in 2012 and 2013 about how it sources ingredients from sustainable farms, an initiative it started in 2001. Investors cheered for Chipotle's expansion, and the stock hit $758.61 a share in August 2015. But it would be years before it soared that high again. In October 2015, food safety officials linked Chipotle to an E. coli outbreak that sickened people across 11 states. It was not Chipotle's first brush with foodborne illness. Earlier in 2015, the chain had already been linked to norovirus and salmonella incidents. But it caught the public's attention. 22 customers were hospitalized. The Centers for Disease Control traced 60 cases of E. coli infection back to Chipotle. In December, Boston health officials linked an area Chipotle to another foodborne illness outbreak. At least 80 people had symptoms consistent with norovirus. It started to seem like every time Chipotle reopened a store after a food poisoning incident, it had to close another one. Chipotle co-CEO Ells apologized on the Today Show. But that wasn't enough. Sales at Chipotle locations opened at least a year plunged. So did its stock price. For the next few years, Chipotle shares were worth only a little more than half of its all-time high. But, more importantly, the incidents damaged Chipotle's reputation with customers. The company had long boasted about the quality of its ingredients. Its meat was raised without antibiotics. Its produce was locally grown and organic. Chipotle called this policy food with integrity. It had been part of its advertising and marketing for years. Chipotle sprung into action. It changed its food safety protocols, it altered its sick leave policy for employees, and it gave away many, many free burritos. Still, despite its best efforts, revenue for 2016 declined by 13%. Same-store sales plunged by 20%. Amid Chipotle's troubles, Pershing Square Capital Management, a hedge fund managed by investor Bill Ackman, took a 9.9% stake in the company in September 2016. The news lifted the stock temporarily. Ackman is known for building a stake in a company and instigating changes that will boost the company's stock price. Ultimately, in December 2016, Ackman was able to make a deal with Chipotle management to name 2 directors to the board. Chipotle handpicked an additional 2 independent directors. Just 2 days before the board changes, Moran had stepped down as co-CEO and left the board. Chipotle's founder was now the only one steering the ship.
He was too much at the center of everything, whether or not it was strategic positioning, operational decisions, media and investor relations. He was trying to cover it all instead of really bringing in delegated expert talent that you should start to have at a little bit later life stages of a business. That's a problem we've seen a lot with Travis Kalanick or maybe Elon Musk.
The company debuted an ad campaign and rolled out 2 menu additions, chorizo and queso. It was hoping to find its footing again when there was another food safety issue. In July 2017, a Sterling, Virginia location was tied to an outbreak of norovirus. In November 2017, nearly a year after Ells became the chain's sole chief executive, he stepped down, and Chipotle started looking for its next CEO.
In this case, at least the board took their time to try to find somebody.
Enter Brian Niccol in March 2018. Before Chipotle, Niccol was chief executive of a rival Mexican food chain, Taco Bell. At Taco Bell, he introduced popular limited-time offers like nacho fries, as well as Taco Bell breakfast. Niccol also pushed Taco Bell into the digital age.
As this company matures, it was always going to look a lot more like a traditional quick service restaurant company. And that's why I think that somebody with that background like Brian, I think certainly helped to breathe new life into the company.
While Chipotle poses a threat to Taco Bell, the inverse is not necessarily true. Fast casual chains like Chipotle appeal to more health-conscious consumers who have a little extra cash to burn. The fast casual segment of the restaurant industry is growing the fastest. On the other hand, fast food chains such as McDonald's are largely using price hikes to boost sales. And Chipotle was now betting that Niccol could do the same for them. Niccol's primary mission was to bring back customers who left during the foodborne illness scares. So far, Niccol has taken some tried-and-true methods from his Taco Bell playbook to make that happen. He even moved Chipotle's headquarters from chilly Denver to sunny Southern California, right in the backyard of Taco Bell's own HQ. Chipotle has also recruited several executives with Taco Bell experience, like its chief marketing officer and the head of its digital marketing.
Brian's one of the most talented people I've ever worked with. We have a good rapport. We were friends, even outside of work. And so having the chance to work with him again was a great opportunity, and being on a great brand like Chipotle, and that opportunity just was hard to pass up.
But Chipotle is still a different company from Taco Bell.
I think people associate Taco Bell and Chipotle as they're both Mexican, but that's a lot of where the similarities end. I think Chipotle is much more of a food brand. Taco Bell was much more entertainment. I mean, we had to come up with something every 4 to 6 weeks, and Chipotle isn't that way.
Niccol has also leaned into the food delivery boom. Chipotle struck a deal with third-party delivery service DoorDash.
We're lucky at Chipotle. We have a very young consumer base, and that is frankly how they want to consume food. What we've been surprised with on delivery is how many new customers have really come to Chipotle just for delivery.
And in March 2019, the burrito chain launched a loyalty program. For every $125 customers spend, they earn a free entree. Within 4 months, it grew to 5 million members. The loyalty program also drives customers to Chipotle's app. That lets the company learn more about them and cater its strategy to what its patrons want. Niccol has also tried to improve the experience for digital customers. Stores have been adding second assembly lines for digital orders, online order pickup shelves, and Chipotlane drive-thrus for digital orders. These additions are meant to bring Chipotle's trademark efficiency to off-premise dining. These investments have helped to grow Chipotle's digital sales. In its second quarter of 2019, digital sales nearly doubled. They made up 18% of total sales in the quarter. Under Niccol, Chipotle has also been testing new food items to expand its limited menu. Fast food chains like Taco Bell regularly roll out new limited-time items to drive traffic. As chief marketing officer and then chief executive of Taco Bell, Niccol regularly oversaw the creation of new menu items. But Chipotle is different. Before Niccol, it rarely made additions to its menu. Customers could return and order their usual without thinking twice. But now, Chipotle wants you to think about changing up your order.
We're not going to be launching, 5 products a year, 6 products a year, but we will sprinkle things in to bring news, to bring interest, and to just kind of freshen up things. But we have no intention of really expanding our menu in any big way.
The chain launched carne asada, another steak protein option, in September 2019 for a limited time. It's the chain's first new protein in 3 years. It also happens to cost 50 cents more than steak, its most expensive protein. And it's working on a replacement for its queso, which launched in 2017 to tepid reviews. Even after tweaking the recipe, it still wasn't a hit. The chain began testing a queso blanco in several markets in July. It's expected to launch the cheese dip nationwide in 2020. Nichols' initiatives are paying off for Chipotle. Despite a foodborne illness incident in Ohio in 2018 that sickened hundreds, the company finished the year up 49%, making it one of 2018's top-performing stock. Chipotle's market share in the Latin American limited service restaurant industry also grew to 22.4% in 2018, according to Euromonitor. It remained in second place, but it managed to steal share from other chains and independently owned restaurants. Redemption came in July 2019 when the stock hit an all-time high, surpassing the record it set way back in 2015. The stock went on to climb even higher, but as October 2019 started, shares were up a whopping 88% over the past 10 months. But so much love from investors puts even more pressure on Chipotle. With a single share of Chipotle worth more than $800, the company has to answer one question: where does its stock go from here? Compared to the stocks of other restaurant companies, like McDonald's, Starbucks, and Yum Brands, shares of Chipotle are pricey. In October 2019, Chipotle had a forward price-to-earnings ratio of 46. Starbucks had the next highest price-to-earnings ratio of 27. Chipotle has nearly 2,500 locations in the US. It thinks it can add even more. The company also has a limited international footprint, with only 39 stores open outside of the US. Nichols told analysts on Chipotle's third-quarter conference call that the company could accelerate expansion in Canada if that business improves. Outside of North America, however, expansion will likely be slower. Nichols said that Chipotle is in the earlier innings in Europe. As for stores that already exist, its focus is on digital and delivery to drive sales growth. According to Deloitte, customers tend to spend 20% more on online orders. Now all Chipotle has to do is live up to investors' high expectations.